Yo, what's good, guys? Happy New Year. How is it going? Can everyone hear me? How's it going, guys? How is everyone doing? Good afternoon, good evening, good morning, wherever you are. Hope you're having a good day. Hope you're having a good weekend so far, and I hope you had a great New Year's. Hey, Alex, how's it going? Clutch. Scott, good afternoon, Scott. How's it going? Adil, as if, nice to see you here. Habib, how are you doing? Oh, let me just put my phone on silent. Emma, Happy New Year. Laura, good morning. How's it going, guys? Hope everyone is doing well. Hope everyone's had a good New Year's. Hope everyone's had a good day so far, and they're ready to learn how to trade AMD and fair value gaps. We're going to get into this in just a sec. We're going to make sure everyone who is here, everyone who wants to be here is here. Hi, little legs. Nice to see you here. Hi, Abby. Sally, nice to see you here. Dan, good afternoon. Dan, how's it going? Ghost. Hi, Ghost. Right, guys. Like the stream, if you're ready to get started, we're going to be teaching you exactly how to trade AMD with IFVGs and ERL and IRL. We're going to be pairing those things we learned in the first lecture with AMD. And it's going to basically allow you to trade the best price action at the best time and just win trades. So at the end of this lecture, you will be able to trade properly. You will be able to take trades using this strategy now. And then in the third and final lecture, we're going to be doing another giveaway, which is going to be bigger than the one we're doing today. And also, we're going to be learning about psychology and how to bring everything I've taught you together. So in this lecture, we are focusing fully on AMD, IFVGs, and ERL and IRL. And also, we are doing a giveaway. There's a 10k funded account giveaway on this stream happening at some random point on the stream, exactly how it happened in the first lecture. At a random point throughout the stream, I'm going to be telling you the actual rules you need to follow, or what you need to do. Basically, I'm going to pick live on stream from the list of people who are commenting in the chat to win the 10k funded account giveaway. But yeah, hope everyone's doing well. Hi, Alan, Emma, Paul, nice to see you all here. But like the stream, if you're ready to get started, we are going to get started with AMD. So what you're going to learn today, basically, is AMD. That's near enough what it is. We're going to be basically having a small recap on fair value gaps and stuff like that. Just give me a sec to get started. So, as you can see, we do have a slight slideshow here in front of us, but this is basically just going to give you a guide so you can actually see it written down in front of you rather than me just telling you things. Hey, Lennon. Suresh. George, nice to see you here. W in the chat, guys. Nice to see you all here. Just give me 1 sec and we will get started. Right, let me know if my mic is too loud and I'll sort it out. I've been trying to put it a little bit further away from me to stop like me blowing into the mic and stuff. I might get a cover for it too if that would help. But let me know if I'm too loud or too quiet, and I should try my best to fix it. But we're going to get started. Let's get started. So like the stream, if you're ready, we're going to be learning AMD. So as I said, it's going to be a similar format to the first lecture that we did. We'll start with the very basic stuff, and then we will build on it. Exactly how we did with highs and lows and built on that to form ERL and IRL. We're going to be doing the same thing with AMD. So what we're going to be learning today, what you're going to be learning today is AMD and its variants. So all the different types of AMD and how it works, using AMD with ERL and IRL and how it actually works alongside market structure, and then finding structure that you want to trade by using AMD. So basically what I'm saying is the best IFVG setups, what I taught you in the last lecture, the best IFVG setups will come from AMD. And the best AMD setups or power of 3 setups will come from trading or looking for IFVGs. So IFVGs and AMD come hand in hand together. The best IFVG setups come from AMD. The best AMD setups come from IFVG. Okay? That's what you're going to be learning today. You're going to be looking at AMD and the different types, using it with ERL and IRL, finding structure you want to trade. So you're going to be able to identify structure that is bad, basically bad PA. PA stands for price action, so bad PA, and actually taking trades properly using AMD, liquidity, and fair value gaps. That's everything you're going to be learning today, as well as the giveaway, which we'll be doing at some point throughout the stream for a 10K funded account, okay? So let's get started with the quick recap on liquidity, okay? Very, very quickly, liquidity. Buy side liquidity is highs, sell side liquidity is lows. ERL is highs and lows, IRL is fair value gaps. As we did in the last lecture, I'm going to be asking you guys questions and I want you to answer in the chat literally just below me. So, price does two things. I repeated this a lot throughout the first lecture. Let's see how many people can remember that. Price does two things. What are the two things that price does? Say it in the chat below. Let's see if you guys remember this. Price does two things. What is the two things price does? Two things. There we go. Seeks liquidity, seeks liquidity. Yes, that's one of them. It does seek liquidity, and what else does it do? It seeks liquidity and offers fair value. Exactly. Abby, Little Legs, Laura, Ghost, Clutch, As If, Slay Fox, Emma. Everyone, correct. It seeks liquidity and offers fair value. Exactly what I taught you in the last lecture. Price seeks liquidity and offers fair value. I'm glad we can all remember that, and we're going to be applying that to the charts today using AMD. Perfect. Everyone, perfect, perfect, perfect. Seeks liquidity and seeks to offer fair value. Perfect. Everyone got that correct. Right, so we know that. That's out the way. We all know, I know, you all know what's going on with the liquidity, what the situation is. ERL, highs and lows, IRL's fair value gaps. Price seeks liquidity and seeks to offer fair value. Now, let's understand AMD, okay? So, as you can see at the top of the screen, there are like multiple charts. These are different scenarios, and they're through different pairs as well. These are the three pairs I trade: GBP, JPY, Bitcoin, gold, and there's a few more GJ than other stuff, but this is just to show you that it does work on a bunch of different things. But understanding AMD, we know what liquidity is now, we know what fair value gaps are, we know what IFVGs are. Let's understand AMD. AMD is the market's natural cycle. It is how it moves all the time. As I said, it's universal. So AMD on the daily translates to AMD on the 1 minute. There's so many different cycles going on at once, but what we want to be able to do is pick the right time frames, first of all, and we also want to be able to identify what AMD is. So let's begin. AMD, what is it? It stands for Accumulation, Manipulation, Distribution. I'm sure the majority of the people watching this know what that is. But as I said, as we did in the last lecture, we need to cover the basics first and build on that properly. And that is the only way you're going to learn anything properly. So, accumulation, where liquidity builds. Manipulation is where liquidity is swept. And distribution is where price moves directionally after sweeping liquidity. Okay, that's distribution is the real move in the markets. Let me see if I can draw on this. Is that a thing I can do? Let's see. Yes, so distribution is the real move in the markets, okay? That's what we want to be trying to trade. The whole idea of trading AMD is to trade distribution, okay? We identify the accumulation, we identify manipulation, and then we trade the distribution move, okay? That's the whole idea of it. And what I'm going to be doing today is teaching you how to trade that. But basically, the basics, there we go. What is AMD? Accumulation, manipulation, distribution. Price builds liquidity, sweeps liquidity, and then has a move. Let's have a look at that on the charts, okay? So, if you want to identify AMD and you don't know how to yet, there's one thing I need you to do, okay? We're going to just take a couple minutes just to basically get everyone on track with these tools. So, go to the left-hand side, the left-hand column, and you'll see multiple tools. I want you to hover over this square, okay? Geometric shapes it's called, and then basically click the arrow next to it. Then go down to rectangle, this here. Click the star next to it, and that will then add it to the widget that we've got from last lecture, okay? Click the rectangle and place it down, okay? Then go to settings. Sorry, I just locked it. Go to settings, okay? And just copy this. Get the background to orange with like 30% opacity, okay? Then go to templates, save as, and call that the accumulation. That's what it is, okay? Save it down. Then you've got an accumulation. Then change the color to green. Save it down as manipulation. Then do the same thing for blue. call that distribution. They're the three colors we want to be looking at, okay? We got orange, green, and blue. Accumulation, manipulation, and distribution, okay? Now that that's out of the way, we can actually look at what it is. So, what is accumulation? Accumulation is a consolidation where liquidity is built, where liquidity is generated. As you guys know from the previous lecture, liquidity is previous highs and highs and lows, okay? Liquidity is previous highs and lows. And accumulation is equal highs and equal lows, okay? Liquidity is previous highs and lows, and accumulation is equal highs and equal lows. So if accumulation is equal highs and equal lows, and liquidity is highs and lows, we can basically just go, accumulation is liquidity. Accumulation has liquidity on the top of it and the bottom of it, okay? And that's what this orange box is for. This orange box represents liquidity, represents the accumulation as well. We have a clear accumulation right here, don't we? Because price is going sideways. It's a tight range where price is building liquidity. That's all it is. It's a consolidation, okay? That's what you need to understand. An accumulation is a consolidation. But this is what the three phases look like. So first we will consolidate, then we will break out of that range very, very quickly, usually, like this, a swift upwards move. We label that manipulation. Price has been manipulated to take out all these highs here. So there's highs here, you know, there's a high right here as well. Like every black line represents liquidity. You know, all these highs on the top side of the accumulation range has been swept by this one candle right here, and that is the manipulation. And then straight after we swept all of that, what happened? We had a massive move to the downside. Now, not always it will look like this. It will never ever just be like 20 bearish candles in a row, but that's exactly what AMD looks like. It's an accumulation where price goes sideways, then breaks out of that range, which is called a fake out, where it basically hits people's stop losses, as you know, because you know what liquidity is. We target people's stop losses, get people into trades in the wrong direction. So inside this circle, people will have their stop losses, and people will also be looking to take buy positions from that area. They'll go, we've got a breakout right here, you know, and you'll probably see those breakout traders on TikTok, on Instagram. People will have breakout trades, and they'll try and trade breakouts only to lose because price just does this in the end anyway. And the reason it loses is because they're trading the manipulation phase. They're trading the fake out. That's what this is. It's an accumulation. Then we come to the upside, take out people's stop losses, and then also get people into trades. People will take buy position. They'll go, we've got a break of structure right here. You guys know exactly what I'm talking about. We have breakout structure. We have a break of structure all over here. People go, price is now bullish after sweeping these lows. Then price just reverses. Okay. Do you see that? Now, I'm not going to explain this as much as I just did. We just take out a low. Okay. We accumulate, reverse, which is the manipulation. Then we reverse again and have the actual move. So this is a clear example on the charts of accumulation, which is the sideways price movement, the manipulation, where we come to the upside, and then the distribution to the downside, okay? This is what it looks like. This massive move to the downside is what you're going to be looking to trade and what you're going to be able to trade once you understand how AMD works, okay? Now, what I also want you to focus on is the price. Sorry, not the price, the time of price movements. So look at the time that this was going on. Look at the bottom of my chart. I don't know if you can see this clearly, but if you look at the bottom of my cursor, you can see that this was around about 11 o'clock. Okay, then we manipulated just before 12 o'clock. And then 12 o'clock comes, we're leading into the New York session, and we start having this massive distribution move down. Okay, keep that, note that down, whatever you need to do. But that's what AMD looks like. We have an accumulation, we have a manipulation, and then we have a distribution. That is what AMD is. But now, we need to dive deeper into each of these phases. Now you know what AMD stands for, and now you know what it looks like. We need to actually dive deeper into each individual stage. We need to look in depth at an accumulation, in depth at a manipulation, and in depth at a distribution, okay? So, now we can move on to the second example. And this is the characteristics of all the different phases, the characteristics of accumulation, the characteristics of manipulation, and the characteristics of distribution, okay? I'm going to read through these PowerPoints very quickly, then we're going to go onto the chart, and I'm going to show you exactly how you could have traded this price action right here. So, an accumulation, what is the characteristics of it? As I just said, it's a consolidation zone with tight price ranges, low volume, minimal volatility, and liquidity builds on both sides of the range. What's a manipulation? Sweeps above accumulation, it can go either side, and then it triggers stop losses and entices retail traders into trades. As I said, you'll have those breakout traders who look to trade the breakout of the consolidation. They lose, and that's why, because it's actually just a manipulation to sweep liquidity and entice them into that trade. And then the manipulation phase will often create a fair value gap as well. Now, you know how to trade IFEGs, you know it, you know fair value gaps. So as I go through AMD, it should start to come together a little bit better. But basically, manipulation creates fair value gaps. Now, distribution is where price breaks out with momentum and follows the institutional daily or session bias. So, you know IFEGs, ERL, all that stuff. Distribution aligns with the bias. So this is what I'm going to, in the next lecture, I'm going to be teaching you how to find a bias. But for now, we need to focus on AMD. So we've got the accumulation, manipulation, and distribution. Let's look at Bitcoin, okay? So a few people will see this and be really confused, and it's just very messy price action to them. But to us, it's very clean price action. It's very nice price action. And we could have traded all of this, okay? What we're going to do is we're going to start off over here. So an accumulation, as I said, is a tight range typically. It's where price goes sideways, okay? Now, that's not always the case. Not always the case. Sometimes we will have this type of move where it's very small candles, very tight range. As you can see, if we just measure the pip distance on this, I don't know if it's a little bit different, yeah, because we're on Bitcoin. But you can see it's a very small move. Now, if we look at the second accumulation, which is right here, it's a lot wider. Like if we just take this accumulation and put it on here, you can see that it's near enough like double the size, okay? They're both accumulations, but one's bigger than the other, okay? So the characteristic, or what I want you to take away from that, is basically the accumulation phase doesn't necessarily need to be a very small range. It's a tight range. So it doesn't have to be like this. It can sometimes just be like this, exactly how I've drawn it here in front of you, okay? Now that I've drawn these two accumulations out, it should kind of make sense how price has been moving, but let's just draw it out. So we have the accumulation. It can be a tight range. It can be a very wide range. It can happen through Asian session, as you can see here, and it can happen through after New York session. So if you just look at the time again at the bottom of my chart, you can see 2:45, which is like just after the New York Open, we started consolidating, yeah? Then we had a manipulation and a distribution. Then at 8 o'clock, we started consolidating again, leading into the Asian session. Then we manipulated down, and then we distributed up. And this happened through the end of New York to the start of London. Excuse me. Sorry. So you can see that it's not necessarily bound to a session time, but I'm going to show you how to read the manipulation and the accumulation and distribution depending on what time it actually takes place. And we're going to be looking at the variance of AMD, but for now I want you to focus on the characteristics of AMD. You know what AMD looks like. This is the characteristics of it. Sometimes we can have a very tight range, sometimes we can have a very wide range, but what I want you to focus on is it's a consolidation. Okay? Let me just, what's going on here? Keeps messing up. Let me just refresh this. So, Josh, I usually mark PDH and PDL as my market structure shifts. You don't really need to look at market structure shifts, Bilk, and if manipulation does offer fair value gap, what to do. I'm going to show you exactly how to trade all of that. Let's go back to Bitcoin. Where were we looking? That's annoying. This website keeps bugging up. Where were we? We can see the AMD playing out here. I've lost where we were on Bitcoin. This is annoying. I think it was the 22nd, wasn't it? Ah, here we go. Right, so we're back. Sorry about that. But you can see, basically, the different types of the accumulation. We have a very small range and a very wide range, okay? Now, the manipulation. Manipulation here is to the upside, okay? Yeah, coming into a fair value gap. Yeah? You see that, guys? The manipulation here comes into a bearish fair value gap formed and then heads down. Then we have the distribution. Okay? And then right after distribution, we have another manipulation. Okay? Then we have a distribution, but this time the distribution goes down, but that's not what I'm focusing on here. What I'm focusing on is that manipulation didn't go into a fair value gap. It created one. It did also create one here, but it came into this one. It didn't come into one over here. It actually just swept liquidity. As you can see, it took out the lows. So we come down, take out the lows, leave behind a bearish fair value gap right here. And then we inverse that. So this should start to come together now. You should kind of start clicking together. So you know how to trade IFVGs, okay? You know how to trade, let me write that down. How to trade IFVGs. We sweep liquidity, ARL, IRL, all that stuff. And that's exactly what's happened here, okay? We take out these lows. Then we have a stop hunt. We have a stop hunt right here, creating a bearish fair value gap, which we inverse very, very quickly. So you would take your entry right here with your stops a little bit just below here, and your take profit goes at a previous high over here, like this one right over here. So once you've learned to trade this at the end of this lecture, you're going to be able to take trades exactly like this. We would have even took a trade here as well. We would have took a trade right here. But more than likely, we were probably targeting this area. And this trade as well. This is a perfect setup. Hey, Rodrigo, how's it going? So, you know how to trade IFVGs. You know ARL and IRL. Okay? I'm showing you it applied to AMD and how AMD and IFVGs tie in together. The best IFVG setups come alongside AMD and vice versa. Okay, what I'm going to do now is I'm going to get rid of these drawings and I'm going to just walk through it in terms of ARL and IRL, okay? So, let's start over here. We take out this low. Actually, tell you what, let's start over here, okay? We take out this low, left-hand side, create a bearish fair value gap, come back into that. So we take out ARL, then come back to IRL, yeah? Then come all the way down again after respecting IRL. Take out the ARL again. This should all make sense. You should not be confused at all right now if you've seen the first lecture. We take E, come back to I, respect it, come all the way down, create multiple fair value gaps, and as I've shown you, when you do that, you just go up a time frame, which means there's probably going to be one there. If we just look at the times, there is. We come back into this fair value gap over here after taking out the low, respect it, come back down, take out the low again, come back up, coming to retrace back to this fair value gap, disrespect it, so we take out the high, okay? But we didn't leave an imbalance here, so we would not look to trade this free candle move, okay? We then come down, take out the lows, leave behind a fair value gap, and this is a little bit volatile because we kind of close outside the range, but then we just reverse straight away anyway. There is also a fair value gap right here. Then we come down, take out the lows, leave behind a fair value gap, then inverse it very quickly. So you take your entry here and you would target the high. You would go and target this high all the way up here. That would be your full TP. Then you would look to manage at this high over here and this high over here as well. So once this high gets took out, you then move to break even. That's how it works. Or you can take partials and move to break even. I typically just move to break even. Then around about here, I would look to take partials, and then we hit a full TP taking out this high, okay? It's literally as simple as that. So you know how to trade IFVGs. You know what AMD looks like. I've just shown you how those two things combine together. The characteristics of them. What I want you to write down from this, the characteristics of each is accumulation, okay, can be a small or large consolidation. Okay, write that down. Accumulation can be a small or large consolidation. Okay. Manipulation, as you should already know, manipulation can take ERL or come to IRL. So you can have a manipulation into IRL or into ERL. Okay. Distribution is either a move to IRL or to ERL. Okay, write that down. I'm going to just draw this out in front of you. So accumulation can be a small or large consolidation, as I literally shown you over here. Manipulation can either take ERL, like how it took out this low over here, or it can come back to IRL, exactly how it comes back to this fair value gap over here, which is IRL. Then distribution is either a move towards IRL or towards ERL. As you can see, this distribution right here was a move towards ERL. It was a move down after respecting IRL. So we take the low, which is it. We take ERL, come back to IRL, then go back to ERL. The going back to ERL occurred through the distribution phase. Then we consolidate, then we manipulate down, taking ERL, then we move towards IRL again. But this will be a higher time frame one, as you're going to understand. Okay, so write that down. Accumulation can be a small or large consolidation. Manipulation can take ERL or come to IRL. And distribution is either a move to IRL or to ERL. I'm going to give you guys just 1 sec to write that down. Okay. You don't need to understand timeframes at the moment, guys. I know you want to understand timeframes, but I'm going to show you timeframes later on in the lecture. For now, all you need to understand is the concept, okay? All you need to understand is the concept. Once you've learned the concept, I'll show you exactly how to apply it on the charts, which will happen in this lecture, okay? So write this down. Make sure you know that. That's the characteristics of AMD. It's not just a clean, simple one size fits all rule. Sometimes we can manipulate into a fair value gap. Sometimes we can manipulate to take a low, and vice versa. So that's the characteristics of all those things. Now we're moving on to something called AMDX, okay? You might have seen this written down somewhere. You might have seen it in my videos. You might have seen it in other people's videos. But what this means, or what this stands for, is accumulation, manipulation, distribution, and expansion, okay? I'm going to give you guys a sec just to wrap your head around AMD first before we dive straight into this. So just make sure you get that written down and stuff like that. Okay, let's see if you've got any questions. By the way, guys, sorry, excuse me, it's probably this monster, but by the way, guys, if you've got any questions, try and save them towards the end of the lecture, because what you'll find is they will probably be answered. And we're also going to be doing like a Q&A section at the end of the lecture, so save your questions till the end. Ghost, if you want to understand IRL, that is literally fair value gaps. And if you want to understand that on a deeper level, you need to watch the first lecture. As I said, lecture 2 is building on lecture 1, so it's very important you've watched the first one before you try and understand this one. I cannot unsee it on our lecture 1. Game changer. Nice to hear. Time for TF is time frame. Yep. I can be profitable. Waiting for this. Yeah, so that's what AMD is, okay? They're the characteristics of it. How do you identify your daily bias? As I said, guys, ask the questions at the end of the lecture, okay? No worries, Ghost. Nice to hear. But AMDX now, you should understand what AMD is. I've given you a few seconds just to, understand it and write it down. Okay? AMDX is what we're looking at next. So, the timings of AMD affects how the cycle will play out, okay? So, AMD, depending on the time frame, will play out differently. Well, not the time frame, but the time that it's playing out. So if AMD is playing out, like, let's say we've got a London accumulation, it might play out differently than we would if we had an Asian accumulation, okay? Sometimes we can have a complete reversal after distributing, and that is the X phase, okay? The X phase, or the expansion phase, is either the continuation of distribution or a complete reversal after the distribution. And this is what it would look like very, very quickly drawn. So, you know, we have our nice accumulation, then we manipulate up, distribute down, and then we have the X phase, which is something along these lines, okay? We'll have the distribution, and then we might have the X phase, which is this. So, accumulation, you know what that is, AMD, all that stuff, you know exactly what this is. Right now, we're going to be focusing on the X phase, okay? So, right, you know, if you're making notes, great. If you're not, start. New heading, AMDX, okay? That's what I want you to write down. So, AMDX, what is it? We can get rid of this now. We don't necessarily need it. What we're focusing on here is AMDX, okay? So, first we need to just very quickly cover the sessions. So the Asian session, you already know this, guys. Asian session, low volume. London session, or London and New York session, high volume. Okay, simple stuff there. Asian session is low volume. London and New York is high volume. Very, very, very straightforward. Okay, so let's say, hypothetically, we have a distribution move. We have a distribution move through Asian session, okay? Because London and New York has such high volume, do you think we're just going to accumulate for the rest of the day and then manipulate and distribute again in Asian session? If we distribute through Asian session, what do you think is going to happen through London session? Will we just go sideways, or will we go up, or will we go down? That's not a question. You don't have to answer that, but it's like a rhetorical one. The answer is we will just basically have an X phase, which is the expansion phase. As I said, the timings of AMD can change slightly how each cycle plays out, okay? So here you can see we have a very clear accumulation. Look at the times, okay? You need to look at the times. That's probably the most important part of this lecture. Look at the times. So, we start a consolidation at 3:30, finish it at 12, then manipulate down till like 2 o'clock. Then after manipulating, we completely reverse. And by 6 o'clock in the morning, which is when, you know, we'll be waking up, we've already had the distribution. Okay? See how it's targeted ERL here, by the way? But you see this. So this entire cycle of AMD played out through Asian session. This entire cycle played out through Asian session, okay? So through Asian session, we have basically distributed. But, as you guys know, Asian session typically has low volume, and London and New York has high volume. So because London and New York have such high volume, do you really think we're going to just start consolidating through London session? No, of course we're not. We're going to have a move. Okay? And as you can see, we do. Focus on the times here, guys, okay? So, we start a consolidation at 3:30, which is coming towards the end of the kill zone, or the AM kill zone for New York. We finish it at 12. Then we have a manipulation move at midnight till 2 o'clock. And then we distribute through Asian session coming into the London session. So we're coming into London session with a distribution. So we've literally distributed into London session. Okay. If we've distributed into London session, are we going to consolidate? Answer that question in the chat. If we've distributed into London session, are we going to consolidate through London and New York? Answer that question. Yes or no in the chat. If we've distributed into London session, what are we going to do? Are we going to consolidate? If we've distributed into London session, are we going to consolidate? Yes or no? Write that in the chat, guys. Exactly. Exactly. Everyone's got... Abby, you got that wrong there. Exactly. Everyone else has got that perfect. Dan, Emma, Ghost, John, Azif, Philip, Adele, George, Scott, Chris, Angie, Alex, Clutch, Slay Fox, Habib, Jay, Joe, Emma. Joe, don't know why you said yes. And you, Jay, don't know why you said yes. There are too much volume to consolidate. Exactly. Exactly. Everyone, near enough everyone there got that right. If you said yes, I'm not too sure if you were just listening, because I did say, I've already given you the answer, but yes, everyone who's answered there and said no, that is perfect. Spot on. That is the correct answer. We will never really ever consolidate in the London and New York session unless there's no red folder news, okay, which we're going to be looking at soon. But typically, we will always just continue the cycle. So, now that that's out of the way, now that I know you understand that, that's what AMDX is. AMDX equals accumulation. So write this down, guys. AMDX equals accumulation, manipulation, distribution, and expansion. Okay? Now, let's just focus on the expansion. We've got that out the way with the timings. We've discussed that. We've got that out the way. Now let's focus on the expansion, okay? Let's just scribble over all this. We don't need to look at any of this. All we need to focus on is the expansion phase, okay? That's all we need to focus on, the expansion. What can that be? The expansion doesn't necessarily need to be a continuation of distribution. It can also be a reversal and vice versa. So, write this down. Expansion, or let's write this down, okay, guys? The expansion phase of AMDX doesn't have to be a continuation. Then another note, the expansion phase of AMDX will either be a continuation of distribution or a complete reversal. Okay, write that down. The expansion phase of AMDX doesn't have to be a continuation. The expansion phase of AMDX will either be a continuation of distribution or a complete reversal. Okay? As you can see right here, it was a complete reversal. And it all depends on the timings. As you trade, as you practice this, you will pick this up. I can give you the answers, but as I said, you need to do that. You need to build the intuition. There's explicit and implicit learning. What you're doing now is explicitly learning something because I'm giving you the answer, basically. You need to implicitly learn this, okay? And implicitly learning just is basically building intuition. So the more you practice this, the more you will pick up on this. When you wake up, let's say on Monday, when you've spent the weekend practicing this, on Monday you go and apply it, you'll wake up, you'll see that, oh, we've just distributed through Asian session, so I can probably take a trade through London session because of the volume. And then we literally get a perfect IFVG setup right here. Take out the high, inverse this, so you can target the low over here, or this low over here, and you can take a trade. Granted, you're not trading the distribution phase, you're trading the expansion phase, but it all depends on the timing. If you're trading the expansion phase, trying to catch it, like if we've right, let's just say an example. A bad example would be if we've distributed through New York session, will we consolidate? Trying to find a way to ask this question for you guys. If we've distributed through New York session, okay, what are we more likely to do? Accumulate or expand? Answer this in the chat, guys. If we've distributed throughout the New York session, what are we more likely to do? Are we more likely to accumulate or expand? What are we more likely to do if we've distributed through New York session? We've distributed through New York. Answer this in the chat. What are we more likely to do? Accumulate or expand? Exactly, yes. Accumulate, exactly. Accumulate. Everyone, Dan, Autumn, Abby, Little Legs, Chris, Dexter, Clutch, Lennon, John, Slay Fox, Jay. Everyone, accumulate. The accumulation, yes, exactly. Exactly as Emma's just said there, guys. Low volume, therefore accumulation. That is exactly true. Perfect, spot on. Harry, Chris, Hezbollah. Perfect, guys. That's exactly right. Perfect. I'm so happy we got all that right. There were a couple people who said expansion, so I just want to re-emphasize this. Okay. It all depends on the timings, okay? It all depends on the timings. If we've distributed through Asian session, you can expect an expansion. If we've distributed through New York session, you can expect a accumulation because there is low volume. Where is it? I've lost it. But because there's low volume throughout the Asian and New York session, the answer is accumulation. Accumulation, guys. Perfect. You all got that right, near enough. The answer is accumulation because there's lower volume in the Asian session, okay? I'm happy with the progress we're making at the moment, guys. Let's just do a very quick recap here. So everyone knows this now. We know what AMD is. We know what each phase of AMD looks like, okay? We know the characteristics of each phase of AMD/AMDX, okay? We know what AMD is. We know what each phase of AMD looks like. We know the characteristics of each phase of AMD or AMDX. Perfect. Now let's move on. So not only is there AMD and AMDX, but there is also something called AD. This is AD cycles, okay? AD cycles. Okay? So we have AMD, we have AMDX, but sometimes we can have A and D. So sometimes we may not need to generate any liquidity, or there will be a stronger liquidity pool somewhere else. So sometimes we don't need to generate any liquidity. What's the whole idea of manipulation? To generate liquidity. Okay, that's the whole idea of manipulation, is to generate liquidity. Sometimes we don't need to generate liquidity, okay? And you will see this happen a lot as well, where we have this type of move and we just move down, 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 and just continue all the way down. That is AD, okay? As Bill asked, if distribution is in New York session, Asian session will typically accumulate. You will know the direction of distribution once I've shown you the phases, okay? So, we have AMD, we have AMDX, and we have AD. AD is when we do not need to generate any liquidity. We will just have a big move, okay? So let's look on the charts and look at some examples of that now. So here you can see a clear consolidation. Yeah, we can all agree that's a consolidation right there. I just want to put a point on. Straight after a distribution, by the way, we have an accumulation, manipulation, and distribution. Then we have an accumulation. But you can see we have a massive move to the upside, which looks like a distribution. But there's no move to the downside first. We don't move down and then move up. We literally just go straight up, don't we? Can you see that? We literally just go straight up. Okay? This is a perfect example. This right here is a perfect example of A and D. Okay? Now, note making time. AD, okay? New heading, new subheading, whatever. AD is short for accumulation distribution. Okay? It is an AMD cycle without the manipulation. Okay? AD is short for accumulation distribution. It is an AMD cycle without the manipulation. This right here. And the way I'm going to get you to understand this is simply just by asking you the question, what's the idea of manipulation? Why do we manipulate? We manipulate to generate liquidity. Okay? So what is an AMD? What is an AD cycle? It is a move where we didn't have to generate liquidity. Okay? So exactly, guys. I can see a few people answering that. We manipulate to generate liquidity and to take liquidity. Exactly. Why do we manipulate? We manipulate to generate liquidity. So what is an AD cycle? It is a move where we didn't have to generate liquidity. Okay? So make sure you write this down. This is probably the most important point about AD. It is a move where we didn't have to generate any liquidity. Okay? Very straightforward there. Now let's go back to the charts. You know that this is now an accumulation distribution cycle. Okay. How do you trade this? How does it work? So many questions. Okay. So, first things first. You don't need to trade AD. Okay? You don't need to. But if you want to, you have to add context. It all depends on the context here, okay? Like if we go to the 2 hour time frame here on gold and look at that accumulation, you can see it's right near a high. So you wouldn't have looked to trade this one because we just took out a high over here. You wouldn't expect this to play out how it did. Okay? That's rule number one, really. You have to look at the context. But if, let's say, for example, right, let's just say that there was liquidity all the way up here. And let's say that's where there was a high. You could expect price to continue up. But how do you trade this? Like, how do you trade AD? Well, first of all, you can see a clear cycle of IFVGs, ERL, IRL, all that stuff right here above the accumulation. Right here. Okay? So, if you were to trade this, which you shouldn't because we just took out a high, but in other context, what you have to do in general to trade AD, you just wait for an IFVG to form. Just like this one right here, okay? But it all depends on the price action. And this leads me on perfectly to the next subject, but I want you to understand that AD is simply just an accumulation and distribution where we didn't have to generate liquidity. But I'm sure you want to know, how do we trade all of these things? You know what AMD is, you know what AMDX is, you know what AD is, you know all the cycles, you know all the phases. How do you actually place a trade and make money from this? Well, that's very, very simple. Let's move on to the next subject. So, you need to look at good and bad price action, okay? Good and bad price action. It's not necessarily just about catching the end of the manipulation move like this and getting in here and taking profits down here. It's simply just looking at the price action, okay? Just look at the price action. There's a thing as good price action and there is also bad price action, okay? I'm going to show you exactly what that is and what it looks like using AMD. Now you understand what AMD is, you can identify whether or not we have good and bad price action. All these questions, guys, ask at the end of the course or the end of the lecture. I'm sure your question will be answered by then, but we are doing a Q&A at the end of the lecture for any questions that you guys have. But yeah, good and bad price action. What is it? What does it look like? Let me show you. Now you know what AMD is. We can use that to identify good and bad price action, okay? So let's go over a few examples. We can literally just use this chart, okay? And I'm going to show you some examples here. So very, very quickly, we've just had, get ready to answer these questions, guys, because you're going to be answering this for me, but we've just had a strong push up, okay? So use AMD to work this out. We've just had a very strong push up, which looks like it's probably distribution, as you can see. So would we look to trade here? Do we want to trade this? Yes or no? Answer in the chat. Do we want to trade after a massive push up? Yes or no? Abby, you're correct. We're going to be moving on to that very shortly, but do we want to trade this? Yes or no? Exactly. Everyone here, no. No one has said, oh, one person said yeah. Everyone has near enough said no. Exactly, guys. Exactly. Spot on. We do not want to trade right after a push up. Okay. Let's use AMD to understand why. Perfect. Everyone is saying no. Perfect. That is the correct answer. We do not want to trade after a massive move in either direction. We don't want to trade it. And that's because of AMD. Okay? So let's see what happens after this. Some of you guys may have already seen this, but let's see what happens, okay? Okay. Exactly. We don't want to trade straight after a distribution move because we're more likely to consolidate than anything else. Okay? So, what we just seen was this move right here. We just seen the distribution move, and I asked you guys, should we trade it? You guys said no, and that's correct because what happens after D more than likely is an accumulation. Now, as you guys know, we do have phases like AMDX and AD, but it all depends on the context, okay? Now, how does it depend on the context? What does that mean? You guys said no. You guys said we shouldn't trade, which is perfect. But I'm sure a lot of you didn't understand why. It's actually, if you look at the bottom, you can see the time frame, okay? Look at the time at the bottom. You can see 4 p.m., 1600. For me, that is the end of the kill zone for New York session, for the AM. So we're heading into the Asian session now. All of this is heading into Asian session. Okay? Asian session starts around about here for me. But all of this is heading into Asian session. We've had the New York volume. We've had the London volume. We don't necessarily need to get another move. Why does that make sense? Why do we do that? Because, as I said, in the last piece that I just shown you, when we distribute through New York, we expect Asian session to accumulate. Exactly how someone's just said, low volume, exactly low volume. Asian session has low volume. We've just distributed through New York, which means we're due an accumulation, but also we're heading into Asian session, which has historically low volume. So there's them two reasons as to why we would not trade it. Not only would we not trade it because we've just had a distribution move, but we would also not trade it because we're heading into Asian session. If we had this distribution move coming into London session, we might look at trading it because then we can expect price to expand. But as we're heading into Asian session, we would look to actually just start accumulating. Therefore, we would not look to trade after this move up, okay? That is bad price action. Technically, it's good price action because we've had a nice move up. but it's a bad time to trade. It's bad structure because we've had just a very quick push up, okay? That's exactly how it works. Now let's look at another example. Okay, right. What about this? Would we look to trade this? We've just had an accumulation. But would we look to trade this? Before you answer this question, look at the time. Would we look to trade this? Would we trade this? We've just accumulated. Would we look to trade it? Exactly. Big Deeds, Abby, Asif, Habib, Suresh, Emma, Dexter, Little Legs, Chris, Emma, also a Friday, Habib, Scott, Suresh. Exactly. No, you do not want to trade this at all. You don't want to trade this. Perfect. Okay? Perfect. Now, we do technically have a move up after it, which is the distribution. But you would not trade this because we're heading into Asian session, okay? There is a manipulation, Artem. There is a manipulation. But with the manipulation as well. So you guys said no, which was correct, okay? Let me just write this down. We accumulated, which would be good price action. But we accumulated leading into Asian session, okay? Plus, as Emma said, it was also a Friday, but I want to focus specifically on this. We accumulated, which would be good price action typically, but we accumulated leading into Asian session. Based on AMD alone, we would not trade this. Not even AMD, based on price and time. Just based on price and time, we would not trade this. We've gotten a consolidation, which is great, but we're consolidating leading into Asian session. As Big Deed said, low probability trade. There's more than just one reason for this though, and this is how I'm gonna teach you to trade this, okay? So, write this down. We accumulated, which would be good price action, but we accumulated leading into Asian session. Based on price and time alone, we would not trade this at all, okay? Now, second point, okay? Good price action is when we go into London or New York with a consolidation. E.g., we accumulate through Asian or London. Okay? That's good price action. So, make sure you got all this written down. We accumulated, which would be, or if we accumulate heading into Asian session, do not trade it. That's bad price action. Good price action is when we go into London or New York session with a consolidation. E.g., we accumulate through Asian or London. That's what good and bad price action is, okay? It's a mix of scalping and day trading. I trade on the 5-minute time frame. But anyway, guys, that's what good price action is. You want to see a consolidation if you're going to trade the IFVG setup. You want to see slow, choppy, speed bump price action like this or like this if you're going to trade an IFVG setup, okay? You want to see this, and that's because of AMD. You want to see that accumulation, then we manipulate, creating that fair value gap. We then inverse it and trade the distribution. okay? That should be the trade you're looking to take. So good price action is when we go into London or New York session with a consolidation. Let's write that down even more. Let's refine it even more. You only want to trade IFVGs when we have accumulated before the IFVG was created. And you will see this as you trade. If you go down and backtest every single IFVG setup, you will see most of the losing trades have two things in common. They're against the draw on liquidity and they're after a very quick move, okay? Literally as simple as that. So make sure you've got all this written down, guys. We accumulated, which would be good price action, but we accumulated into Asian session. Good price action is when we go into London or New York session with a consolidation. You only want to trade, this is the key point here, guys, you only want to trade IFVGs when we have accumulated before the IFVG was created, okay? Write that down. Make sure you've got that. That's the key point of trading all of this. This is the whole idea of why I'm teaching you AMD. Okay, so make sure you got that down. Okay. That's what good price action is. Going into London session, going into New York session with an accumulation. Okay? Like here. Now, you may have already seen the answer here, but based on what I've told you here, okay? Let's see, let's take this with us, okay? We're going to take this up here with us. Now I need you to answer the question again for me, guys, okay? So, if you only want to trade IFVGs when we have accumulated before the IFVG was created, here we've got an IFVG form right here, okay? Would this be a good time to trade? Answer in the chat, would this be a good trade, yes or no? Yes or no? We've just accumulated, manipulated up, we've got that nice speed bump, slow price action, then we create the IFVG. Would this be a good time to trade, yes or no? Exactly. Everyone has said yes. Not one person has got this wrong, which is perfect. Big Deeds, Laura, Asif, Little Legs, Habib, Jovan, Chris, Emma, Maidens, Universe, Abby, Vitali, Rodrigo, Scott, Suresh, Artem, John, Wayne. Exactly. Perfect. Exactly. You would look to take a sell here for multiple reasons. Now, you may already be in this AMD trade over here. You may already be in this one from this fair value gap created over here. But if you wanted to take a re-entry and you're looking at this cycle, this is where you would look to trade again. It's just simple stuff. I'm going to walk through this all together, but this is a perfect trade. Multiple reasons, okay? Multiple reasons. This is a great trade. You are correct if you said yes. This is a great trade. Why is it a great trade? One, we've had an accumulation throughout the London session, inside London session, which means we've still got volume. We're going to get more volume as we head into New York session, so we can look at trading this, okay? That is reason number one. Second reason is if we look at ARL and IRL, okay? Let's just look at ARL and IRL. Completely remove the idea of AMD for a second. There's this low over here. There's this low over here. Okay? And there's obviously this low right here and this one up here. But focus on these two. So we take E, we go from ARL, we take ARL, yeah? Then we come back to IRL, which is this fair value gap right here, and respect it, and then head down. So you would look to trade this. This would be a perfect trade, okay? Perfect trade. Now, let's look at the move before this. Okay? There's like all AMD. This is all just one accumulation here. Okay? This is all one accumulation. This is all through our Asian session right here. Okay? Then we come up over here in the manipulation, form a fair value gap, coming into London session. Then we inverse that fair value gap here, and that's where you look to trade. You'd put your stop loss just above this high, and your take profit would go all the way down here. So you would take one trade here, take profits. After distributing, we then accumulate again, manipulate, and then you get in for trade number 2. Okay? So on Friday, the 27th of December, by like 12 o'clock, you already took 2 trades. Exactly, yeah. Using AMD on the 4-hour works well. Should we wait for it to reverse to IFVG? You can look for it to inverse the IFVG. You wouldn't wait for it to reverse to it at all. How you want to trade IFVGs, how I explained in the last lecture, when you do this, you don't wait for it to come back and do that. You just wait for it to close below here. Simple as that. So you don't have to wait for it to come back at all. But this is a perfect setup. 2 trades, perfect setup because of the time and the structure behind it, okay? Now, let's actually move on to the next subject, okay? So now you know, let's just do a quick recap. You know what AMD is, you know what accumulation looks like, you know what manipulation looks like, you know what distribution looks like, you know what AMDX is, you know what the AD cycles are, you know what good and bad price action looks like, and now you can look at trading it using AMD, fair value gaps, and liquidity to spot high probability setups. Okay, so this is where you're going to be learning to actually take your entries, okay? This is where you're going to be learning to actually take these trades, okay? So, here is another example of a trade that you would look to take, okay? But you wouldn't trade this because we're in Asian session. Now, I just want to show you how it works though, okay? So, when you're taking your entry, the way you would want to enter, very simple. Let me write it down first. So, this is going to be like the steps for it. So on the daily, you find your bias. You found your bias on the daily and the 4-hour. I've given you the bias. Okay. The daily and the 4-hour have given you the bias. This is not what, I'm not teaching you the bias today. Okay. So we'll explain that another day. The daily and the 4-hour have given you bias. You then move to the 15-minute or the 5-minute. Okay. For IFVGs / AMD. Okay. So you want to use the 15 or the 5-minute time frame for your IFVG setups. Okay. Now this is literally just dependent on your situation. If you work a 9 to 5, you know, are really busy and don't get much time to look at the charts, what you want to do then use the 15-minute, okay? It's that simple. Like, using the 1 minute is a bit crazy, but if you work at 9 to 5, are really busy and don't get much time to look at the charts, you know, you can only really glance through it on your lunch break or something like that, use the 15-minute time frame. That works too. But if you're serious about it, you want to become a full-time trader, if you have a lot of free time or can make a lot of free time, use the 5-minute. Because the only reason I'm saying this is because when you're managing your trade, it's going to be a lot easier to manage your trade in a 15-minute time frame when you're working a 9 to 5. But if you have a lot of free time and you can look at the charts, then it's going to be nice and easy to trade the 5-minute, because you can look and make adjustments very, very quickly. You're not going to get caught up in meetings. You're not going to get caught up with your kids, whatever it is. If you have a lot of free time, or you can make a lot of free time, use the 5-minute time frame. If you don't get much free time, use the 15-minute. It's literally that simple. Now, me personally, what time frames do I use? I use the daily, the 4-hour, the 1 hour, the 15, and the 5-minute, okay? But I typically will trade on the 5-minute, okay? Now, don't focus on the time, okay? I'm just showing you the entry, okay? Specifically just the entry point here, okay? Just the entry. All you really want to do is take your entry after the first inverse fair value gap is formed, okay? Literally that simple. Place your stops above it, but you want to keep your stop loss 2 liquidity zones away. So you do something along these lines like this, okay? And that is literally it. I know this is through Asian session, but I want you to just focus on the entry. I'm trying to just teach you the entry here, okay? So the steps for the entry. Now, once you've picked your time frame, is number 1, wait for good price action. In brackets, accumulation. Okay. Number 2, wait for manipulation. And you know how all this works, either into IRL or taking ERL. Here, we manipulated into IRL. We came into a fair value gap over here, okay? Now, wait for the fair value gap we formed during manipulation to be inversed. If you want to write it down step by step, this is how you write it down. Wait for good price action, wait for a manipulation either into IRL or taking ARL, wait for the fair value gap we formed during manipulation to be inversed, take your entry, targeting ARL/IRL, okay? So, as I said, the characteristics are different for every single distribution cycle. Sometimes you'll be catching distribution towards a fair value gap using higher time frame ARL to IRL. Sometimes you'll be using distribution towards lows using IRL to ARL, okay? But you know IFVGs, you know ARL and IRL. All you need to do is find the right session, which is London or Asian or London accumulation. Wait for that manipulation to occur into ARL or IRL, form a fair value gap, wait for that fair value gap to be inversed, take your entry targeting ARL or IRL. Literally that simple, okay? That is how you take the entry, okay? So here, using that, we take the entry targeting ARL, okay? Now, in terms of managing the trade, there's multiple things you can do. First, we need to look at setting the stop losses and stuff. Exiting the trade, okay? We already know TP, ARL, IRL. Or sometimes you can learn to put it at just the other side of the accumulation range. Now, you'll pick up on that as you learn to trade. And as you learn to use this, you'll know when and when not to do that. And then the stop loss simply goes 2 liquidity zones away. That's pretty simple. You can have a soft stop loss and keep it very, very close and have a soft one, or you can just keep it 2 liquidity zones away. Now, there's pros and cons of each, okay? What's a soft stop loss? A soft stop loss is where you basically say, I'm going to close the trade at this level, rather than like having a actual stop loss at that level. You just wait for the candle to close, and then if it closes like that, you can then close the trade, okay? But the issue with that, issues with a soft stop loss, is you can get caught in like bad moves. You can lose a lot very quickly, okay? That's why I don't use them. Now, how I do it, there are cons to it. Issues with keeping SL 2 lick away is you get on average a lower R, but you don't actually run that risk of having this. And also when you're trading with prop firms, some prop firms will require you to have a stop loss and will refuse payouts if you don't actually have a stop loss in some of the trades you take, and other things like that. But issues with a soft stop loss is you can lose a lot very quickly. Issues with keeping stop loss 2 liquidity zones away is on average a lower R. But why is it 2 liquidity zones away? As you guys know, I've shown you what a stop hunt is. So keep SL 2 liquidity zones away from price. And this can be in the form of ERLs and IRLs. So ERL or IRL. So it can be above a fair value gap and above a high, and that would count. But this is why we do that, is to avoid being caught in a stop hunt. Now, there are multiple ways to do this. You can use ATRs, you can use soft stop losses, but I just simply do this. It's a lot easier. You don't need the indicator. You don't need a soft stop loss, which is bad because you can lose a lot. I've been burnt from that. So I just keep it 2 liquidity zones away, and that's what I want you to do as well. So this is IRL. This is ERL. Liquidity zone 1, liquidity zone 2. We would have to inverse this and then come up and take the high if we're going to continue up. So you just put it there, and then you put your liquidity, you put your TP at ERL, and you can look to manage the trade once we take the other side of this range. Okay. And you know, as you can see, very, very straightforward. But that's how you want to trade. You would look to adjust your stop loss, you know, once we've come down here and took this low. And you'll pick up on this as you trade. Like, you'll learn to manage the trades. You'll go, well, we've got a fair value gap right here. We've just took out a low. So, like, let me just zoom back. So if we go back to this candle here, okay, we go, okay, so we've just took a low here, yeah, left behind a fair value gap. We would have to inverse this fair value gap, take out this high, and then continue up. So all you have to do really then is just put your stop loss above here, okay? Then it's 2 liquidity zones away, and then you just let it play out, basically. You can look to take partials at the other side of the accumulation range. Sometimes I look to trade there as well. And that's pretty much it. Like, that's how you want to trade it. Okay. I think here's another example. Okay. So this is a trade I would take as well. Okay. So, first things first, we have all this low, all these lows over here taken out, okay? All these lows to the left-hand side, okay? And if we go to a higher time frame, like the 1 hour, you can see this is the ERL, okay? So we come down, okay? And then we retrace, after taking ERL, we come back to the fair value gap, which is over here. See that? So we take the low, ERL, come back to IRL, respect it, inverse this fair value gap here, entry. You know, I'm going to draw it out for you just so you can see it. We have the accumulation here, then we have the manipulation and the distribution to the downside, and it's literally that simple. Okay? There you go. These are trades you would want to take, okay? And if you want to see me taking these trades, you can go back to my live streams, like, and wait for my next one. My next live trading stream where I'm trading. I trade every single day live. I'm on a break at the moment because it's Christmas and New Year's, but I'm back live again on the 21st of January where I trade this every single day in front of people, okay? And I also do have a stream journal. I think it might even be linked down below if you want to check that out eventually, but there is a stream journal here, basically tracking every single trade I take. But yeah, that's pretty much it. So I hope everyone understands that at the moment. Now, we've covered everything we need to learn. We've looked at AMD, we've looked at accumulation, manipulation, distribution, we've looked at AMDX, AD, good and bad price action, using it to actually take trades, and that's pretty much it. What side of the country are you in? I am from Liverpool in England, so north. Now, the common mistakes of this is entering too early. Okay, you don't want to do that. There's ignoring the session timing, so make sure you're looking at the timing, because time in trading is key to near enough everything, because it shows you when there's going to be more volume. Now, you don't want to fall for a fake manipulation as well, which is when we're not taking ERL and we're not coming into IRL. And then you want to also make sure you're not ignoring ERL and IRL. All these 4 points are big mistakes that I've seen a lot of people make in my time teaching people how to trade. They do this. These are the 4 most common mistakes when people are trying to trade this strategy, okay? So, we've near enough got that out the way now. I've shown you IFVGs in the first lecture. I've shown you IFVGs and liquidity. In this lecture, I've shown you AMD and how to bring those two things together. So now you should be able to go and take these trades on your own on a daily basis. So by the time Monday comes around, if you've done some back testing, if you've got the practice in between now and then, you should be able to trade this properly. You should also be able to journal the trades you're taking, review what you're doing wrong, and stuff like that. So if you're actually looking to take this seriously and you want to learn to trade like this, all you need to do really is journal your trades and send them into the Discord. That is literally it, into the free Discord, which is the first link in the description. All you need to really do is journal the trades you take, send the trades you take into the Discord and ask for feedback, and you will succeed, because people in the premium group will give feedback to you, and I will also give feedback to you as well. So you'll know what you're doing. But if you're looking for key takeaways from this lecture, AMD is the way the market moves. Lower time frame AMD is usually ERL to IRL on a higher time frame, and looking for an IFVG setup right after a big move is a bad idea. You have to pair that with the timing of the sessions as well. If we have a big move coming into London, you can look to actually either reverse or continue, so you could take an IFVG trade. But as you guys even said, if you look at taking an IFVG setup after we've distributed through New York session, it's probably not going to work out. Okay? Literally rinse and repeat. Well, yeah, that's it, guys. Now, giveaway, okay? As I said, I'm giving away a 10k funded account, okay? So what I need you to do to enter this is like the stream. And second of all, if you've learned something, spam W. I'm going to be picking at random to see who's won a 10k account, okay? All you need to do is spam W, and that is it. If you've learned something, spam W. I'm going to be picking from a group of people who've learned something to see if they're the winner. So just spam W if you want to win a funded account. All you have to do is spam W, and I will pick from random to give away the 10k account. Okay, guys? Spam W if you learned something. Let's get it. This is crazy. Yes, guys, exactly. Okay, keep spamming. I'm going to pick from random. If you've learned something, spam W. I'm going to be picking from a group of people who've learned something to see who's winning the funded account. Okay, let's get it, guys. Okay, so the next time I look at the screen, okay, I'm going to pick the first name that I see. And then what I want you to do is DM me basically on Discord, and I will give you a 10k funded account, okay? That is all you need to do. Just spam W if you've learned something, okay? That is literally it. Give me one sec, guys. Keep spamming. I'm going to be picking from random. Next time I look at the screen, next time I look at the screen, okay, guys? So keep on spamming W. Keep it coming. Next time I look at the screen, I'm going to read the first name that I see, and that person has won a 10k account. All you have to do is DM me, okay? Jovan Lefebvre BVRE. Jovan, you have won a 10k funded account, Jovan. I need you to DM me on Discord, okay? This is crazy, guys. All these W's. Crazy. Jovan, you've won a 10k funded account, DM me. Jeez, W. Is he here? Jovan? Jovan, okay, you seen it. Jovan, DM me on Discord and I will send you, I'll give you the details, okay? And that is literally it. Jovan has won the 10k funded account. And that's it, guys. All I ask from you now, if you've learned something from this lecture, that is it. If you have any questions, guys, ask them now. And I will message you. Oh, sorry, I won't message you. I'll reply in this chat. Ask me any questions now, guys. Any questions? Appreciate it, Dan. Happy to see so many W's in the chat, guys. This is crazy, even after we've done it. Yes, Alex, I do. Yes, Q&A, guys. If you've got any questions, ask them. I'm going to be sitting here for a couple of minutes before the stream ends. Appreciate it, little legs. Emma, happy I can help. Happy I can help, Philip. Dan, nice to see. Maiden's Universe, what session do I trade the most? So, Maiden, I trade New York session live every single day. That's typically the time that I will take the most trades is through through New York session, the Open of New York. So about 2:30 PM GMT is when I will take the most trades. That's when I'm live every single day. Does different pair react differently for that concept? No, Artem, it does not really react differently. If you noticed, with all the examples I was showing you, they were on different pairs. There was GJ, there was Bitcoin, there was gold. That was basically just to show you that it works on different markets. It works in Forex, it works in crypto, it works in commodities. So, no, it doesn't just work on GJ, it works on everything. And I've shown that in the examples that I was showing you today in the lecture. Thanks, Chris. Appreciate it. Happy I can help. Yes, Clutch, if you want to watch the first lecture and you missed the first lecture, it is literally on YouTube. If you go to my live streams on my channel, you will see the previous lecture. And now, the next lecture, guys, is on the 9th. Actually, we're pushing it back. The next lecture is on the 12th of January, guys, okay? What I'm going to do is, if for the people that are still here, I'm going to just schedule the next stream, and I want you to go ahead and basically bookmark it, whatever you need to do. Click the bell on the next stream that I've scheduled right now, and it'll basically be about psychology and daily bias. Okay, lecture 3. So I'm going to put the lecture 3 link literally just under this live stream right now. Let me just schedule it very quickly. It'll be on the 12th of January, guys, the same time as today. 12th of January, the same time as today, is the third and final stream, or the third and final lecture that I'm going to be doing. Okay, so if you enjoyed this lecture, just go on to that lecture. The link is in the bio right now. If you go down to the description, the link to the third stream is in the description. All you need to do is click on that, and there will be a bell, and you click the bell, and you'll get notified when I'm live. But I use one-of-one funding, and my personal broker is Pepperstone, because I'm in the UK. might be different for you depending on where you are, but happy I can help out. Nice to see. Thank you, Abby. No problem, Clutch. Matthew, trading platform and market recommendation. If you're looking to trade this strategy, simply just use GJ. I use GJ every single day live, so it's probably going to be easiest for you to learn GJ. Some candles break the fair value gap, but it don't go as trend. It will reverse and go opposite. Manju, I think, correct me if I'm pronouncing that wrong. That is literally what I shown you in the last lecture. In lecture 1, I shown you how to trade fair value gaps and IFVGs. No problem, Wayne. Yes, I know, Chino. I don't have to trade every day. I don't trade every single day, but I'm live every single day. I trade like most of the time. You can just see it for yourself, really, if you look at the stream journal. But thanks, Asif. Happy I can help you. It's very nice to see I've helped so many people, guys. I'm so happy that I've helped. Jovan, if you're still here, message me for that on Discord, and I will give you the funded account. And that's pretty much it. Like, I hope you've learned something new today. I hope it's cleared any issues you had in trading. All I ask for you now is to join the free Discord, send in your attempts of trading this, and that's the only way you're going to improve, because then I just give you feedback, and that's it. Okay? Like the stream if you learned something new, guys. The next lecture will be on psychology and daily bias, bringing everything together. So from the third lecture, you should be able to trade this properly, and that is literally everything. Any questions after the stream, ask them in the Discord, message me on Discord, and I will always get back to you. But other than that, guys, like the stream if you learned something new, subscribe if you haven't already, make sure you click the bell, and make sure you join my next stream on the 12th of January on Sunday, a week tomorrow, okay? A week tomorrow. Sunday the 12th of January, 2:30 PM GMT. I'm going to show you metacognition, confirmation bias, baseline visceral state, all these different psychology issues that people struggle with and how to tolerate them, and as well, how to learn a daily bias, how to find your daily bias. And that's literally it. The spam on the Discord, I'm sorry about that, Artem. There's nothing I can do. I make sure they're not in the server. So when you're getting spammed by scammers with using my name, there's not much I can do. You have to check the middle. You have to check the name to see if it's the right one. Or you can add me as a friend, and then you'll instantly know that everyone else who adds you is a scam account. That could work. But yeah, exactly, Big Deeds. It's important to take breaks. Roland, nice to see you here. And that's me done, guys. I've got nothing else to share. As I said, like and subscribe if you learned something new. I hope you've learned something new. I hope you've cleared things up for you. I hope you have a good rest of your weekend. And I'll see you in the next stream, guys. Take care.